Hi, Jeremy Peterson here with Vesta Real Estate in Ogden, Utah. It is June 2021 and time for another real estate market update. So let's talk about our headline numbers first. Price growth year over year is up an amazing 34.8%. Days on market has creeped up 1 day to be 6 days on the market, and our sales volume has declined 15% year over year. And these figures are for May. I'm not going to go over all of the charts like I've done in past updates. I'm just going to focus on a couple today and talk about them a little bit more in depth. And the first I want to talk about is our price growth year over year. This chart actually should cause some alarm for us. It does so for me. And the reason being that I can't recall a period in Ogden history when house prices have increased this fast for this long. It seems like we're on an unsustainable trajectory with this sort of price increase, not keeping up with wages. And at some point that has to stop. The question is how is that going to happen? In the past, we would normally see house prices increase 35% over a 10 to 15 year period. And for that to happen in 1 year like we've seen is just unprecedented and should cause some alarm bells to go off for us. Some folks are saying that we will see a real estate collapse, like the market will freeze up and prices will drop. I don't see that happening. And the reason is, from a political standpoint, that is just not a course that is acceptable to policymakers. The collateral damage that comes with that, like we saw during the Great Recession, is so great that it's intolerable. And so policymakers will most likely pursue another course. What I'm afraid of is that housing is actually a leading indicator of what's going to happen with everything else, that everything else is going to melt up to catch up with what's happened with house prices. And that would mean rents, utilities, cars, lumber, milk, eggs, and wages would all increase to catch up to housing in the same order of magnitude to balance things out. That's one way the market might come back into some sort of equilibrium. The discomfort that we feel during that type of outcome or process would depend on how wages keep up with the repricing of everything. If wages remain flat or static, kind of like they have been recently, then we could expect the housing market to lurch into a malaise as sales volumes collapse because wages just aren't keeping up with house prices. And we can actually kind of get a glimpse of what that might look like if we look at our sales growth chart year over year. Let's take a look at sales growth here, and you can see that for the past 3 months we've had negative sales growth. So sales volume has dropped over the past 3 months. The last time this happened was in 2018, late 2018 and 2019, and that was when interest rates had increased. But interest rates have not increased recently. In fact, they've kind of dropped a little bit. And so what this means is that at prevailing interest rates, fewer and fewer people are able to afford houses at their current prices. And so that's one potential outcome if wages don't increase, is that our sales volume may continue to drop. But if wages increase and keep up with the repricing of everything, we will see that sales activity will likely continue because home buyers will have the money to buy homes, and they'll just be balancing out mortgage payments at prevailing rates with the new price of everything else as that happens. And so the outcome is uncertain. We don't know which way the market's going to go, but my hunch is by October we're going to have a better idea which way the market's going to break in whatever direction. So if you need a real estate professional to help you navigate through this market, give me a call and I'd be glad to talk to you. Thanks for tuning in.